Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil. Paris rapeseed. In late June, the market broke up through and closed over a short-term upper wedge trend line, and made a fresh onslaught higher, reaching the primary and secondary targets for this small descending expanding wedge pattern, and rising in early July to make new highs not seen since July 2023, reaching up to the congestion seen in September 2012 between 513 and 3/4 to 519 and a half. Once there, prices fell away, but only down to a little short of the 2013 high at 464 and a quarter, and the medium moving average currently at 476 and a half, reaching it 5 weeks ago. The market then saw a rise the same week, peaking at the congestion at 504 and 3/4 and just over the neckline extension of the June to October 2023 head and shoulders top, currently at 500 even, only to fall away again, a small bear flag 3 weeks ago, down below the medium moving average this time, and under the dark blue highlighted lower bull channel line, currently at 469 and a quarter, and that's of the June to mid-August very wide bull channel. Now, I did say this 3 weeks ago, and I quote, "This, I stress, may not be the final pattern here, but it's the pattern that is currently dominant, the one we have to deal with, and will thus treat the bull channel as the key current feature, with the neckline acting like a median line, if you will, until something else develops." End of quote. 2 weeks ago, something else developed, a July-based bearish shift pitchfork, highlighted in bright red on my daily chart. I'm not in love with this bearish pitchfork, and I'm quite happy to retire it if it becomes troublesome, but for now it shows quite well the bearish angle of attack of this market. Prices today are just below the middle time, currently at 457 and 3/4, as well as under the interesting 50% Fibonacci line of the May to July 2023 move at 456 and 3/4, as well as below once again the gold flatlining long moving average, currently at 455 even. There's one other feature I'd like to highlight for a third week, and that is a late April to mid-August head and shoulders top is utilizing the same dark blue lower channel line as its neckline. It is not a great looking example of a head and shoulders pattern, pretty ugly indeed, and it has so far not revealed whether it is a head and shoulders top or a head and shoulders continuation pattern. So I suggest watching the neckline and the action near and around it, though for now I do favour the head and shoulders top action. If that is the case, apart from the bright red middle time keeping an eye on a 50% absolute Fibonacci line at 445 and a half, I suspect this might be key. The final observation is to do with the moving averages. Since the start of August, prices have been roughly corralled by the overhead medium moving average and below by the long moving average. Excuse me, the medium moving average being at 476 and a half and long moving average at 455 even. It'll be interesting to see what happens when prices finally do break out of these restrictions and not just test them. Winnipeg canola. There has been and is a lot going on here, as you can easily see. I'll do my best to interpret it. Towards the end of May, the market moved up, breaking through the long moving average, currently at 640.60, but soon after running out of steam on the upside from the sheer effort of doing so. However, in this process, the month of May became a monthly key reversal up, a longer term bullish pattern that initially I suspected might influence the market, if not now, then in the future. However, since then, I have had strong doubts. You see, June did not see any immediate resultant move high. Instead, prices chose to drop, making lows at the end of the month not seen since the horn bottom of February. The fall was finally stifled by a 2-day pipe bottom made at the end of June, based on the May 2023 low at 611.10. The prices then zigged and zagged higher throughout July. Now, the initial zig higher was up to the combination of the long moving average and the June 2021 low at 655.90. The subsequent zag down was to just over the May 2023 low, and the following zig back up was towards the May highs, just over the lesser Fibonacci line at 679 even. Now, the latest zag lower has been extended and has seen prices rip down through all the moving averages, which have been far too close together for my liking, and I will deal with them shortly. but prices punched down through the 2021 low at 629.5, as well as the purple highlighted extension to the neckline for the April to June head and shoulders continuation pattern, currently at 622, and the May 2023 low. All this toing and froing created a wideish bull channel between late June to late July, which I've highlighted in bright red on my daily chart. However, this bull channel did not last, and I laid out 2 weeks ago the reasons why not, and I quote, "The first and most obvious is the previously mentioned concentration of moving averages, all within a small area. Specifically, they have not acted as supports, and at most, the long moving average has acted as a resistance back at the start of July. Personally, I suspected these moving averages may be more of a nuisance than anything else right now, but we shall see." End of quote. Now, I said I would deal with these moving averages again, and looking at them over the last 3 weeks, I've seen a new pattern emerge. Early 2 weeks ago, the market formed a bearish bow tie formation of the short medium moving average, currently at 626.80, the medium moving average, currently 639.30, and the long moving average, currently 640.60. The only feature about them that is different is that the moving average have entered the bow tie formation in the wrong order, but though they have exited in the right order. Now, part of a bow tie formation is what it does at the beginning, but also some 15 to 20 sessions after formation. So at this latter time, there is usually a period of volatility and sometimes a further move in the direction of the bow tie. Thus, watch out for any such occasion between the 28th of August and the 4th of September. Finally, 2 weeks ago, I drew a bearish Andrews pitchfork in dark blue for the late May to late July action. This had been a bit of a preemptive move on my part, but I felt obliged to show this, as this pitchfork is now showing the bearish angle of attack, especially where it has been congregated around the middle time, currently at 383.5. Activity this week has so far shown how supportive the February 2024 low has been for a second week, with the market rejecting a move lower beyond this. Further down, we have the December 2020 low at 567 even, and the October 2020 high at 552.80, and the September 2020 high at 541.60. However, beyond this, we only have the declining dark blue lower time, currently at 323.30. Bursa Malaysia crude palm oil. Back in February this year, we had a key break higher over what eventually became the bright red highlighted broken upper time, currently at 37.76, the August to November 2022 bearish shift pitchfork. I still keep this pitchfork on my daily chart because, looking back, the market hesitated and built a base on this very thoroughly broken upper time, helped at the time by the 50% Fibonacci line of the May 2023 to April 24 move at 38.75. Which is interestingly has been just above the current market for the last 2 weeks, as well as the long moving average, currently at 39.30. The move back up from the testing the bright red broken upper time started as a counter to the monthly key reversal down in April, creating a small reverse head and shoulders bottom over May, with a neckline extension currently at 394. Sorry, that's wrong. Neckline extension. Let me put that through to you. Yeah, that neckline extension is at 39.42, not too far above the current market. In early July, prices did rise, but soon fell away again, leaving, if you include the changeover gap, an island top in the first week of July. However, the decline was stymied for a while during July, but in early August, we saw prices take a flyer on the downside, down through the mid-May, early August dark blue highlighted uptrend. There was also a lower bull channel line, currently at 39.28. I'll explain a little bit more about that as well. Prices continue their decline, and yes, you've guessed it, 2 weeks ago down to the same old bright red highlighted upper time, mentioned right at the start of this commentary. We've held around there now throughout August, mainly between the lesser Fibonacci line below at 37.21 and the 50% Fibonacci line at 38.75. However, I still have some concerns. You see, as I said 2 weeks ago, and I quote, we can look at the whole action since early April as potentially one very large bearish halfway hesitation. If that is the case, then the potential on the downside is well below the current bottom of my daily chart, down in the 34.20 area. quite a large move. Hence I have drawn, so this is 2 weeks ago now, I've drawn an early April to early July bearish Andrews pitchfork on my daily chart to try and gauge the bearish angle of attack, and that's the end of the quote. Last week I highlighted this bearish pitchfork in mauve. At the moment, I should say actually in purple, it's not mauve, it's purple. At the moment, the market is between a little under the upper tine above, which is currently at 39.13. There is one final point, and it's a contrary point in some ways, but a point I've been stressing now for 22 weeks. I gave my thoughts back then on what was going on thus, and I quote, "So what now?" Well, for this I went to my standby on such occasions, the longer term monthly charts, and there was one clear standout level that needed to be watched, and that was the November 2022 high at 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level. End of quote. Now, for the moment, I would still continue monitoring this 44.08 level. It's a longer term play, as well as the purple upper tine and the bright red broken upper tine for the immediate future. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.